Hi guys, and welcome to my channel. This is Wendy, South Florida. We talk all things South Florida living, real estate, and business. Today, we are here to bring you the market update, especially a lot of crazy things that are going within the real estate market here in Florida and all over the country that we definitely want to discuss. So Todd, how are you doing today?
I am doing fantastic, Wendy. Thank you so much for having me on this video today.
Awesome. Yeah, Todd, as you know, the real estate market over the course of the last 2 years has been super crazy. We're starting to notice that things are slowly starting to change, right? Of course, every market is different. Some are still experiencing multiple offers, and some are experiencing more homes are on the market significantly longer than they anticipated, right? So what exactly are you seeing on your end coming in as a from the loan officer side, the mortgage side? What exactly are you seeing on your end?
Well, I think we might be experiencing maybe like a second wave of the market shifting now. Since the beginning of the year, as most people know, interest rates pretty much doubled. Affordability went down to the lowest since 1989. And a lot of people are just having second thoughts on purchasing. Now, even though we've ran the numbers on rent versus own calculators and the break-even period is just a little bit longer for it to make sense, people are still seeing a lot of fears of recession talk.
Yep.
And thinking that, now is not necessarily the best time to buy. So I feel like the cat's out of the bag now, right? With interest rates up, recession talk, economic slowing, but yet there's still demand at pre-pandemic highs. And so what I'm seeing though personally, and I think a lot of loan officers are seeing, is maybe a little bit more challenging files. There's some folks that maybe don't have the best credit, that we're doing a little bit more work on getting credit scores a little bit higher, or working with the hometown heroes a little bit more, because there's a lot of folks coming out that don't necessarily have ample funds to make the purchase happen. But luckily there are some other programs that we can access that help get people to the closing table. But I think you're just seeing more clientele coming through who maybe feel like they've missed the boat in the last couple of years. Yep. And just want to start building wealth for themselves and their family. But definitely, it's the buy side has slowed down, and it seems like the sell side is slowed down a little bit too with new listings.
Yeah, no, totally. I'm noticing that as well. I'm seeing, although more homes are coming on the market, of course, right? It's still considered a seller's market, right? But slowly shifting into a buyer's market eventually. And what I'm experiencing are, although more sellers are wanting to put their homes on the market, some of them are second guessing themselves and wondering what should they do. Yep. A lot of buyers also are just sitting back and just waiting to see, okay, what's going to happen? Because, we're hearing so many different things all over the media, all over social media that are discussing, a crash that may be possibly happening. Also, you have buyers that are saying, okay, the rate is, it's still high, although it's, low, historically low, right?
Historically, yes.
Compared to like in the 80s. But, so you're having both buyers and sellers that are stating that, they want to sit back and wait to see what exactly is happening. Plus, some sellers that are like, okay, well, my friend's home sold 2 months ago for X, Y, and Z. They're expecting that now that they decided to put their home up for sale, and they're not getting those results, right? The homes are staying on the market significantly longer compared to, home being gone, off the market within a day. And instead of experiencing multiple offers, they may experience maybe 1 or 2 offers or 1.
Yep.
So there's a lot of things that are going on right now. And a lot of buyers, of course, are wondering which steps to take and what exactly to do. And I'm sure applications on your end have slowed down as well, right?
Yeah, mortgage applications are definitely down. There was a report this morning I didn't look at. I think it may have came in slightly higher than expectations, but no, they're still down. But once again, I mean, right, we're still hovering right around like those pre-pandemic peaks with demand. So, yes, things have shifted, and it's slowed down, but there's still business out there. Refinances, obviously, those aren't really prominent right now as interest rates are higher, and it just doesn't make sense for a lot of people to refinance.
I agree.
there's are a lot of investors who are still looking to take cash out of properties. So that's actually a pretty hot part of the application portion as well, is that, a lot of investors say, hey, I want to get my cash out now. There was some information out by Knight. So Knight is similar to a company like CoreLogic, who said that since May, tappable equity has actually decreased by 5%. So I think some people are seeing, oh, wait, let's strike the iron while it's hot. Let's get that equity access now.
Yep.
So then if things do pull back or slow down and there's more opportunities, they'll have that cash sitting with them. But yeah, definitely applications have slowed. But once again, the business is very cyclical. We pulled so much business forward from COVID.
Yeah.
You can see on the charts how much or how increased existing home sales were, and home sales in general, that we're just feeling those effects now, right? So hopefully people save some money from the last couple of years, and you can ride out this this shift and slowdown that we're experiencing now.
Yeah, absolutely. And I have also seen a lot going on in terms of the media and people even on YouTube that are discussing foreclosures. You're seeing some people that are like, okay, the foreclosure numbers aren't as high as what people are anticipating like in 2008. But then again, you see some YouTubers that probably just want clickbait that are saying, oh my God, foreclosure, what is going on? And it's like, of course, these buyers, and they're wondering, oh my God, what exactly is going on? What exactly is true? Of course, and I've said it time and time again, I do not foresee everything that's going on right now to mimic what transpired, in 2008. I just don't see that happening. That's just my personal opinion. Right, exactly. And plus, a lot of, homeowners also have equity within their home, right?
Biggest difference from last time. Absolutely.
Exactly.
So, to touch on that, so what's different from 2006 to 2008? Well, number one, people properties are what they call equity rich. People have so much more equity in their properties now versus back then, because what was happening back then? You could have a 580 credit score, 600 credit score, and get 100% financing with no income and no asset documentation. I mean, now that is just an absolute recipe for disaster.
Absolutely.
On top of that, I remember there were some companies, second mortgage companies, doing second and third loans on properties above 100% loan to value. I mean,
oh my gosh,
insanity. None of that stuff is even remotely possible these days. None of it, right? And so another thing too is there's huge generational shifts in the housing market that were taking place. So since the housing crash or Great Recession of 2006, 2008, housing starts are drastically lower. Housing formations, which is people moving out of mom and dad's house, or a divorced couple going from one house to two houses, those are housing formations. Those are still creeping they're still increasing a lot. So if you have housing formations increasing, millennial population, who's the largest cohort of population, 48.8% of them are homeowners, but 90% want to be homeowners. So that's a huge, huge crowd of people still looking to buy their first house and build wealth. And on top of that, you have people in very low interest rates. So if you're a homeowner right now with a 2.5–3% interest rate, and you have no reason to really truly have to leave your house, but maybe you want to, you're not going to sell. You're not going to sell your house. So you have low inventory. You have possible low inventory. Housing starts are lower, which means there's less new homes being built, but yet you have a large millennial population that is looking to buy homes. So you still have high demand and that low supply factor. So, and on top of that, Florida being, more of a local market down here, we have so much wealth that came into the state through the pandemic that I feel like those factors right there are going to support us. And really just decrease the probability of a large crash. Now, don't get me wrong, right? So we're at what, 16 to 18% appreciation year over year. Next year around May, we're expected to be around 5%. So in order to get from high teens to low middle single digits, we may have some month over month decreases in value, right? But nothing substantial. It's going to be a journey down to the high teens to the low 3 to 5% increase. But overall, there's still demand holding up the market, and markets are made up of supply and demand. So those factors still remain in favor of property values, which actually the CPI number that came out yesterday too, the largest share of an increase was housing. So, until the Fed really increases interest rates enough and destroys demand for housing, which is going to be a pretty big challenge, we're probably going to still see a pretty strong market. So
I totally agree with that 100%. We're still dealing with migration. A lot of people are still moving here, especially now from California. Still a lot of people from up north, Texas. We're still dealing with here, South Florida, where a lot of people want to retire. A lot of people want to live. It's been their dream place. They consider it to be paradise, which I totally agree. They're still moving here. There's still a lot of people that want to experience that South Florida or even Florida lifestyle. So we're still experiencing that, of course. And also, I want to touch on builders right now. There's a lot of things going on with builders. Incentives are coming forward compared to what they were not offering before. They're getting to a point where they want to get rid of the homes that they've built, right?
Correct.
So those numbers they're crazy. Not to mention a lot of buyers have decided to elect they rather cancel and lose their escrow deposit because they don't even want to move forward with the purchase anymore. So there's a lot of different things going on the builder side.
Well, yeah, so builders actually, so there was a big shift. I'm sure you recall because, we work a lot together. So remember, first-time home buyers were just getting really frustrated with not getting their offers accepted, getting outbid, no, just one after the other. So they started going to builders where there was less competition, maybe some incentives for them to buy, which actually kind of dissipated as competition got more. But then builders ramped up their housing starts through 2021, and now with the shift happening so quickly with mortgage rates doubling, now they're sitting on, a good amount of inventory. Actually, I think that the recent inventory is at like 10 months of new homes built. But that's different from the existing home market. So they're two different markets. So it's going to be interesting to see what happens. But, there's obviously some good incentives to go to new homes now versus existing.
True.
Just because, once again, supply and demand, there's more supply on the new home side and maybe less demand. So they're willing to give more incentives, higher real estate commissions, bigger money back. I even saw $1,000 down for a property in Port St. Lucie. That's insane. But once again, that's the shift of the market we're experiencing. But yeah, new homes are definitely in a different scenario than existing, night and day.
Totally. And especially in regards to the incentives that are being offered, what I've been seeing is a lot of them are offering like $10,000 towards closing costs,
Yeah.
And, some buyers are like, okay, that's really, I love the sound of that. So let me go ahead and try that. So, there's still buyers that are out there still purchasing. I am getting a lot of calls and working with a lot of cash buyers as well, too. Some that still investors that are still looking for a good deal. Of course, we're always going to get that call of someone looking for a deal that's definitely from out of state that think that they can just find some magical, amazing deals. Not to mention, there may be some deals out there, just not exactly what you're expecting because we have such an influx of people that are moving here and the prices and everything like that. I totally feel like South Florida is the place to be. I'm biased. I'm a South Florida. I'm from Florida, so I'm a Florida girl, so I'll always feel that way. But honestly, things are changing. And if you're a buyer and you're wondering if you should still purchase and you're just trying to weigh things out, if it financially makes sense to you, then if it makes sense for you and your family or just you in general, then feel free, to reach out to, a local lender, a loan officer, and ask as many questions as possible to see what your options are, because without asking, you just don't know, right? Very true. Definitely continue doing your research because that always is important, and speak with the local agent that's very knowledgeable within that market to help you make that decision a lot better, because you're always going to have a friend that's going to say, it's going to crash, it's this always. And that. And, that may stop you from taking that leap of faith. But right now, as I've done with other buyers and have other closings, they're shocked that, we're getting these homes under contract. Their offers are getting accepted under asking price. I feel like those days of 100,000 over asking, those days to me, I feel like are are gone because, I went under contract with a home that was what, $10,000 under asking. And just literally this morning, we're at 15,000 under asking. So
Wow.
anything is possible. I mean, I'm aggressive. So, and I go hard for my buyers and my sellers, but it is possible. If you're out there and you're wondering if you should buy, just definitely reach out to some experts to help make that decision more easier for you. That's what I'll definitely say. And Todd, that brings me to my last question, actually, as far as, some people are saying it's a seller's market. Some people are saying it's officially a buyer's market. What I personally think is it's still considered, based off the numbers, it's still considered a seller's market that's slowly shifting into a buyer's market. That's what I'm seeing based off of my research. What are your thoughts on that?
Well, it's interesting because if you Google what a buyer's market is, there's a lot of different definitions, a broad definition of explanations. But I think it's a fact that a balanced market is 6 months, right? I think that's pretty much written in stone. 6 months is a balanced market. But how do you determine if it's a buyer's market? I think it's more of not really a certain amount of months of inventory, but more an actual sentiment. And like, how are buyers feeling? How are sellers feeling? I mean, I guess you could still have a balanced market, but still have prices going up and still have the sellers being aggressive. So technically, if you look at numbers, I think nationally we're at 3.3 months of inventory, so far from the balanced market. South Florida, I think the recent ones I did were maybe closer to 4 months. I think one in the Tri-County area, maybe Palm Beach or Miami-Dade, was at 5 months, but still not quite to that balanced market. I had 3 offers in the last week that were actually declined because it seemed like the sellers were still stuck in the late 2021 mentality to where they want appraisal gaps. They want over asking, even though, they're 20,000 below the recent comp, but you still have some sellers who are just haven't faced the music yet. But on the other side, like, a recent deal we did with our most recent client, I mean, that was a phenomenal opportunity for her because she was able to go under asking and really get the request that she wanted that would have definitely not have taken place even 6 to 8 months ago.
I agree.
So yes, we're shifting, but I feel like it's more property specific down here in South Florida than just a broad generalization of all the inventory. So yeah, I mean, I think there's still great opportunities out there. And like you touched on in your last discussion, it's really important to speak with professionals who are not only unbiased, but are speaking to you objectively, who want to give you good, objective information to help you and maybe your family make a good decision on what makes sense to move forward. So definitely reach out to professionals you can trust and aren't going to feed you fear, like you said, with the YouTubers. I mean,
yeah. I'm seeing that a lot.
You see some of these videos. I mean, it's just, exclamation marks, fire, collapse. I mean, that person's getting paid by YouTube. They want you to watch their video to get paid. There's no substantiated information in there that's going to show why we're actually going to drop. It's just selling fear. So speak to professionals who are going to be, giving you objective information to make the best decisions for you and your family. But yeah, we're definitely shifting, Wendy. So, we'll see what happens here moving forward. But it's a very interesting time, to say the least.
I'll definitely continue to monitor and do as much research as possible for all my buyers and sellers, 100%. If you're a buyer out there and you're still hesitant about purchasing and you want to hold off a bit, my recommendation is to save as much as you possibly can. If your credit is less than perfect, then I recommend that you continue to work on your credit, check to see if there's any negative or erroneous items off on your credit. Check your credit report and definitely work on getting your financial situation in order before you take the leap if you want to hold off. But if you're ready to make the purchase and you feel like you're in a place where you can afford, and now that you feel like the frenzy may be slowing down or is over, then, as me and Todd mentioned, feel free to reach out to an expert within your market to better assist you. And guys, there you have it, the market update with Todd Hanley. I hope you guys definitely enjoyed our time in this video. I'll leave his information down below. And anytime you guys have any questions, I'll be more than happy to answer. So Definitely. Until next time. Any last final thoughts, Todd?
Well, I mean, interest rates definitely just hit a high yesterday. I think they might be coming down. So, once again, speaking to a quality loan officer who can help guide you and give you informative information as to what the trends are, where rates might be going, and just once again, have your expectations set for what you're getting into, and just have someone in your corner to make sure that you're making the right decisions and being objective with you. So.
Definitely. And don't listen to your friends unless they're experts
Ah,
in the market. That's my advice. So,
so
guys,
true.
thank you so much, Todd, for joining me today. Thank you guys for watching. This is Wendy, South Florida. And until next time, peace.
Thanks, Wendy.